Hello students, admission of a partner lecture 5 problem number 5. In present video I am going to explain about fifth problem from admission of a partner topic. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about admission of a partner topic. First 4 lectures videos links are available in the description box. This question is also available in the description box. Let us see the problem first. Mr. X and Y are partners sharing profits and losses in the ratio of 4:1. 4:1 is the old ratio. 4 number belongs to X, 1 number belongs to Y. So old share of X is 4/5. How 5 comes? 4 plus 1, 5. And the Y's share is 1/5. Their balance sheet as on 31st March 2020 was as under. This is called old balance sheet because it contains the details of old partners. Liability side, he is giving capitals of X and Y 50,000, 1,30,000, general reserve 30,000, profit and loss account 10,000, creditors 25,000, bills payable 5,000 rupees. Asset side, furniture 40,000, stock 80,000, bills receivable 20,000, debtors 60,000, bank 50,000. Two sides totals are 2,50,000 rupees. Below the balance sheet, he is giving additional information. They agreed to take Mr. Z into partnership with effect from 1st April 2020 on the following terms. By seeing this word, they are taking Z as a partner. We should understand that this is admission related problem. Here X and Y are known as old partners. Z is called new partner. A. Mr. Z brings 40,000 rupees towards goodwill and 60,000 as capital. B. The assets are revalued as under. Furniture value 50,000 rupees, stock 78,000 rupees, debtors 58,000 rupees. C bit. The goodwill be retained in the business. Prepare necessary ledger accounts and prepare balance sheet of new firm. This is the question. In this question, he is asking us to prepare ledger accounts and new balance sheet. So journal we don't prepare for this problem. Directly ledger accounts and new balance sheet we will prepare. In ledger, we have to prepare revaluation account, capital accounts of X, Y and Z, bank account because bank balance is given in the question, then goodwill account. After ledger, new balance sheet we should prepare. Let us start the solution with revaluation account. This B bit is related with revaluation account. In ledger, first we prepare revaluation account. Revaluation account is a nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. When loss comes in revaluation of assets and liabilities, if asset value is decreasing or if liability value is increasing, then loss comes. It should be debited. When profit comes in revaluation of assets and liabilities, if asset value is increasing or liability value is decreasing, then profit comes. It should be shown on the credit side of revaluation account. In old balance sheet, furniture value is given as 40,000 rupees. And in adjustments, he is giving that the assets are revalued as under. Furniture value 50,000 rupees. In old balance sheet, furniture value is given as 40,000 rupees. And in revaluation of furniture, old partners came to know that market value of furniture is 50,000 rupees. So furniture market price is increased by 10,000. That 10,000 is profit because furniture is an asset. Asset value is increasing here. So credit side we have to show that 10,000 rupees profit. What to write? Buy furniture. Show the calculation in brackets. Furniture market value 50,000 minus furniture book value 40,000. Furniture is increased by 10,000 rupees. In adjustments, he is giving that stock is revalued at 78,000 rupees. In old balance sheet, stock value is given as 80,000 rupees. In old balance sheet, stock value is given as 80,000 rupees. In revaluation of stock, old partners came to know that market value of this stock is 78,000 rupees. So, market value of stock is decreased by 2,000 rupees. 80,000 minus 78,000. Stock is an asset. Asset value is reduced. It is a loss. It should be debited to revaluation account. So, we should write to stock. Show the calculation in brackets. Book value of stock is 80,000 but market value is 78,000. So, loss in revaluation of stock is 2,000 rupees. In adjustments, he is giving that debtors is revalued at 58,000 rupees. In old balance sheet, debtors value is given as 60,000 rupees. Debtors value is given as 60,000 rupees in old balance sheet. And in revaluation of debtors, old partners came to know that now debtor value is 58,000 rupees only. So debtor value is reduced by 2,000. It is not depreciation. If debtor value reduces, it may be bad debts or provision for bad debts. So I am taking this 2000 as provision for bad debt. Debtor value is reduced. Debtor is an asset. Asset value is decreasing. It is a loss. It should be debited. We should write to provision for bad debts. Debtor's old balance sheet value 60,000 rupees and revalued amount is 58,000 rupees. So debtor value is reduced by 2,000. It is a loss. Related with the revaluation of assets and liabilities, all adjustments are completed. Finally, we have to balance this account. Credit total is more than debit total now. In rough notes, write down the credit total first. Minus debit total 4,000 rupees. Then difference 6,000 is credit side we wrote profit. Debit side, we wrote losses. Profit is more than the loss. Means, in revaluation of assets and liabilities, finally we got a profit of 6,000 rupees. This 6,000 is to be transferred to old partners' capital accounts in old profit and loss ratio. We said we have to show that transfer. As debit side total is less, debit side we have to transfer this amount to old partners capital accounts. So we should write to X capital account to Y capital account. Old profit and loss ratio of X and Y is 4:1 no? So X share is 4 by 5, Y's share is 1 by 5. So 4/5 of 6,000 we should transfer to X capital account. 1/5 of 6,000 we should transfer to Y's capital account. 4,800. 1,200 into 1. 1,200 rupees. So in total profit 6,000 we should transfer 4,800 rupees to X capital. 1,200 rupees profit to Y capital. Then two sides write down the totals. 10,000 rupees, credit side also same. Suppose we are writing journal entries. Then related with revaluation account, 3 entries you have to pass. First entry, revaluation account debtor to stock account to provision for bad debts account. Second entry, furniture account debtor to revaluation account. Third entry, revaluation account debtor to X capital account to Y capital account. So revaluation account is completed. Next come to capital accounts of all the 3 partners. Capital accounts of 3 partners. We have to start capital accounts with opening balance. From where we should take this value? In old balance sheet under liabilities side, he is giving capitals of X and Y no 50,000 rupees, 1,30,000 rupees. These 2 amounts we have to write here. So credit side we have to write this opening balance by balance brought down. In X column 50,000 rupees, in Y column 1,30,000 rupees. For Z, don't write anything because in old balance sheet, Z amount is not given. Then the doubt is, why opening balance credit side we are showing? Capital is a liability. Liability shows a credit balance. Therefore, opening balance we are writing on credit side. Otherwise, you can use the hints also. Capital account is a personal account now, because instead of writing owner's name, we write capital word. Personal account rule, debit the receiver, credit the giver. Means, from the firm, if partner is receiving any benefit, that amount, debit side we should show. Credit the giver. To the firm, if partner is giving any amount, that amount, credit side we should show. So same point, let me explain in another manner. Partner is the receiver, that amount appears on debit side. Suppose partner is retiring, then all these amounts partner should return to the firm. So remember, debit side, which amounts we should show in capital accounts? The amounts which partner has to return to the firm at the time of retirement of a partner should appear on debit side. Similarly, credit the giver. Credit amounts are partner has given to the firm. Suppose partner is retiring, then firm should return all these amounts to partner. Take capitals. X capital 50,000, Y capital 1,30,000. Suppose they are retiring, then firm should return these amounts to partners now. Therefore, credit side they are appearing. So after writing opening balance, we should write revaluation account answer. In revaluation account, we got profit. That profit we transferred to old partners capital accounts. That entry we should post here. If you are writing journal entries, entry we post. Here, without journal entries, we are preparing capital account now. So we have to depend on these hints. If partner retires, then firm should pay this revaluation profit to partner. Means revaluation profit, credit side we have to show by revaluation account. In revaluation account, we have calculated these amounts. In total profit, X share 4,800, Y share 1,200. For that, don't write anything. After revaluation account, we have to observe whether any accumulated profits are given in the question. Next, we have to observe whether any accumulated profits are given in old balance sheet under liability side. There are two accumulated profits. General reserve 30,000 rupees, profit and loss account 10,000 rupees. General reserve and profit and loss account balance. These two accumulated profits, firm should pay to partner if partner retires. Means these two amounts appear on credit side only. By general reserve, by profit and loss account. General reserve amount is 30,000 rupees. In that 30,000 rupees, old ratio is 4:1 now for X and Y. In 30,000, 4 by, add these two numbers, 5. 4/5 of 30,000 should belong to X. 24,000 rupees. Remaining amount belongs to Y. You need not to calculate. If you want to calculate 30,000 into 1 by 5 you have to do. But 30,000 minus 24,000, then the remaining amount will come 6,000 rupees. That amount you have to write for Y. Don't show this calculation in capital accounts. In rough notes you have to calculate. Next you come to profit and loss account. Amount is 10,000 rupees. In 10,000 rupees, X share is 4 by 5. 2,000 into 4, 8,000 rupees. From 10,000, if you deduct 8,000, remaining amount 2,000 belongs to Y. Next come to goodwill and capital adjustment. A bit. Mr. Z brings 40,000 rupees towards goodwill and 60,000 rupees as capital. C bit. The goodwill be retained in the business. When Z is admitted into the partnership firm, he is bringing 60,000 rupees capital and 40,000 rupees goodwill. When new partner is bringing capital and goodwill both, then goodwill should be adjusted as per premium method. To adjust goodwill, there are three methods. First one, premium method. Second one, revaluation method. Third one, memorandum revaluation method. In question, he never mentions the method name. By observing the sentence, we should only understand under which method we have to adjust the goodwill. Here, goodwill is to be adjusted as per premium method because new partner is bringing capital and goodwill both. Under premium method, we have three sub-methods. Premium A, goodwill paid privately. In question, that sentence is not given. New partner should pay the goodwill privately. Therefore, it is not premium A. Premium B, new partner brings goodwill. That goodwill we have to distribute to old partners as per sacrificing ratio. After that, that goodwill amount will be retained in the business. In C point, clearly he has given in the question, the goodwill amount should be retained in the business. Even though that sentence is not there, it is premium B only. Because premium C is what? New partner brings goodwill and capital. That goodwill we have to transfer to old partners' capital accounts in sacrificing ratio. After that, old partners withdraw that goodwill amount from the firm. Goodwill should be withdrawn by the old partners. That sentence is not given in the question. So privately, word is not given, withdrawn, word is not given. So we should not adjust under premium A, premium C. Then what is left? Premium B, goodwill should be retained in the business. In question, under asset side, he has given bank balance. Cash balance is not there. Therefore, while writing the journal entry, we have to take bank account as one account. Our assumption is, instead of bringing these two amounts, capital and goodwill into the firm in cash, Z directly deposited these two amounts in our bank account. Our firm is maintaining one bank account. In that account, these two amounts are directly deposited. That is our assumption. So for writing journal entries, first step is you have to identify the two accounts now. As money is deposited in bank account is one account. This amount is brought by Z. Therefore, Z account is another account. Bank account with one organization name, if you open any account, it is a personal account. Z account with a person name, we open this account now. This is also a personal account. Personal account rule, debit the receiver, credit the giver. Banker is a receiver, Z is a giver. Therefore, debit bank account, credit Z account. But Z is owner, partner. Owner's name we should not write in the books. So instead of writing Z name, we should write capital word. But if you write only capital, there is no clarity regarding whose capital that is. Because three partners are there. Therefore, we have to prefix partner's name also. Z capital. So first entry is bank account debtor to Z capital, bank account debtor to Z capital, and even goodwill also we have to credit. Why? Because Z is bringing capital and goodwill both. Why goodwill account is credited? Because this goodwill is not an asset to the firm. This goodwill firm should return to old partners. When new partner is coming, old partners are sacrificing some portion of their profits to new partner. For this sacrification, old partners expect some compensation from new partner. That compensation amount is called goodwill. So, when new partner brings goodwill, firm should pay this goodwill amount to old partners. To the firm, this goodwill is a liability. Liability shows a credit balance. Therefore, goodwill account is credited in first entry. Come to second entry. This goodwill we have to transfer to old partners' capital accounts. How we pay the amounts at the time of admission, you know. We need not to pay that in cash form. By transferring to old partners' capital accounts, we pay all those amounts. General reserve amount, revaluation profit, profit and loss account balance, otherwise goodwill amount. So when you transfer this goodwill amount to capital accounts, goodwill account will get closed. We credited goodwill with 40,000 and we created goodwill account. If you want to close this goodwill account, we should debit it with the same amount. So to close the goodwill account is debited with 40,000 rupees. And why old partners capital accounts are credited? Capital accounts show a credit balance because capital is a liability. If you want to increase the capital amounts, you have to credit capital accounts again. If you want to decrease the capital amounts, you have to debit capital accounts. Now, goodwill amount we are adding to old partners' capitals. So, firm's liability increases further. Capital amount increases. Means capital account should be credited. That is the reason why old partners' capital accounts are credited. Then, this goodwill amount, in which ratio we have to distribute to these old partners? In sacrificing ratio. Because old partners are sacrificing some portion of their profits to new partner. So in which ratio they are sacrificing their profits? In the same ratio, they have to take the compensation, nothing but goodwill amount. Therefore, sacrificing ratio we have to apply in this journal entry. Regarding sacrificing ratio, remember these points? In question, if a new profit and loss ratio is not given, then sacrificing ratio, old ratio, both will be the same. In question, if new ratio is given, then sacrificing ratio we have to calculate by using one formula. Formula is old ratio minus new ratio. In present problem, new profit and loss ratio is not given. Therefore, old ratio 4:1 becomes sacrificing ratio also. So in 4:1 ratio, we have to distribute this goodwill amount. 2x 40,000 into 4 by 5, 32,000. 2y 40,000 into 1 by 5, 8,000 we have to transfer. So this is all about goodwill entries in case of premium method BBIT. Now these two entries we have to post in capital accounts. See the first entry, capital account is credited. Therefore credit side we have to post this entry. By what to write? Other side, debit side we wrote bank account now, write down that account name. Z capital now, therefore amount should be in Z column. As we wrote bank account, don't think that we have to write 1 lakh rupees here. We are not preparing bank account now. Capital account we are preparing. So capital amount 60,000 rupees we should write. First entry is completed. Come to second entry, capital accounts are credited. So credit side we have to post this entry. And the other side, debit side, goodwill we wrote now, write down that here. By goodwill account, 32,000, 8,000. Now put the totals. As debit side nothing is there, same amount appears as balance carried down. To balance carried down. These three amounts appear in new balance sheet under liabilities side as capitals. So capital accounts of partners completed. After capital accounts, we have to prepare cash account or bank account. Now the doubt is, which account we should prepare? Cash account or bank account? In balance sheet under asset side, bank balance is given and cash balance is not given. Therefore, in this problem, we have to prepare bank account. We have to start bank account with opening balance. From where we should take that opening balance amount? In old balance sheet under asset side, bank balance 50,000 is given now. This amount we should write here. Debit side, you have to write this opening balance. To balance brought down. 50,000 rupees. Why debit side we are showing this bank balance? Because bank balance is an asset. Asset shows a debit balance. Therefore, opening balance should be shown on the debit side of bank account. Next, come to journal entries. Here in first entry, we debited bank account now. So this first entry we should post in bank account. Which side? Now bank account we are preparing. Bank account is debited. So debit side we should post. What to write? Other side, credit side accounts names we should write. To Z capital account, to goodwill account. Amounts are 60,000 and 40,000. In second entry, bank account is not there. We need not to post. So debit side only we have the amounts. Put the total. Same amount appears as balance carried down on credit side. Total also same. So in new balance sheet, as bank balance, we have to show this amount, 1,50,000 rupees. After bank account, we have to prepare goodwill account. In old balance sheet under asset side, goodwill amount is not given. Therefore, there is no opening balance for goodwill account. So directly goodwill entries we have to post in this account. See the first entry, goodwill account is credited. Therefore, in goodwill account, credit side we have to post this first entry. What to write? Other side, debit side. We wrote bank account now, write on that. By bank account. But don't write bank amount 1 lakh rupees. We are not preparing bank account now, we are preparing goodwill account. So goodwill amount you have to write 40,000 rupees. Come to second entry, goodwill account is debited. So debit side we have to post this entry. Credit side we wrote X capital and Y capital. These two account names we have to write here. 32,000, 8,000 rupees. Now two sides put the totals. Two sides totals are same. Means goodwill account is closed. There is no balance carried down in goodwill account. Why? Because in first entry by crediting we created goodwill account. In second entry by debiting with the same amount we close this goodwill account. Goodwill account balance 40,000 we have transferred to old partners capital accounts and we closed goodwill account. Therefore, in goodwill account balance carried down is not there. As there is no balance carried down in goodwill account, in new balance sheet asset side goodwill amount doesn't appear. With this, ledger is completed. In ledger we prepared revaluation account, capital accounts, bank account, goodwill account. Next, balance sheet. Balance sheet of three partners. Balance sheet of X, Y and Z as on 31st March 2020. As a new partner's name also we included. This is new balance sheet. Based on the old balance sheet and additional information, we should prepare new balance sheet. Let us start with the liability side. Capitals at the end we show. Come to these two amounts, general reserve, profit and loss account. These two accumulated profits we are transferred to old partners capital accounts now. Means these two accounts are closed. So in new balance sheet we should not show these two amounts again. Creditors. Related with creditors there is no additional information. Therefore creditors amount 25,000. In new balance sheet also under liability side you have to show. Creditors 25,000 rupees. Next, bills payable 5,000 rupees. As there is no additional information regarding bills payable, same amount appears in new balance sheet under liability side. Bills payable 5,000 rupees. So balance sheet liability side completed. Observing additional information, any extra liability is given. There is no extra liability. So liability side, all amounts we have written. Finally, we have to show the capitals of all the three partners X, Y and Z. As capitals, which amounts we have to show here? In old balance sheet, under liability side is giving capitals of X and Y. No, don't show these amounts here. In capital accounts, we got the answer no balance carried down. These three amounts we have to write here. You can show these three amounts in inner column. Total you can write in outer column. Otherwise, directly in outer column you can show these three amounts. So liability side completed. Next come to asset side. Furniture value is given as 40,000 rupees. And in adjustments he is giving that the market price of furniture is 50,000 rupees. Furniture. Old balance sheet value is 40,000 rupees. Means book value of furniture is 40,000 and market value of furniture is 50,000 rupees. In new balance sheet, market values of all assets you have to show. But don't directly write down that 50,000 rupees. How that 50,000 came? In inner column, show the calculation. 40,000 rupees plus appreciation 10,000 rupees. 40,000 plus 10,000 in outer column 50,000 rupees. Next, stock. Old balance sheet value 80,000 rupees. In adjustments he is giving that stock is revalued at 78,000 rupees. Stock. In old balance sheet, stock value is given as 80,000 rupees now and market value of this stock is 78,000 rupees. So 78,000 we have to show here, but don't directly write down that. In inner column show the calculation. 80,000 rupees minus depreciation 2,000, in outer column 78,000. 80,000 minus 2,000, 78,000 rupees. Bills receivables 20,000. Related with bills receivable there is no extra information. Therefore same amount 20,000 appears in new balance sheet under asset side. Bills receivable. As there is no adjustment, amount directly in outer column, 20,000 rupees. Debtors, 60,000 rupees. In adjustments, he is giving that the revalued figure of debtors is 58,000 rupees. Debtors. In old balance sheet, debtors value is given as 60,000 rupees. And in additional information, he is giving that debtor value is 58,000 rupees. So debtor value is reduced by 2,000. This 2,000 is considered as provision for bad debts. So we should write 58,000 rupees in outer column. But don't directly write down that. In inner column, show the old balance sheet value 60,000 rupees minus provision for bad debt 2,000 rupees. In outer column, 58,000 rupees. Bank. Don't show this 50,000 rupees. Which amount we have to show here? In bank account, balance carried on amount is there, 1,50,000. This amount we have to show here. Bank, 1,50,000 rupees. So old balance sheet, asset side amounts we have taken. Not only that, even adjustments also once you have to verify any additional asset is given or not. There is no additional asset here. So all assets and liabilities are completed. Once you recollect goodwill account is closed. There is no balance carried down in goodwill account. Therefore, in new balance sheet asset side, we should not show the goodwill amount. So under premium B bit, that is goodwill brought by the new partner and goodwill is retained in the business. In this method, we should not show goodwill in new balance sheet. So finally, put the totals two sides. Two sides totals are 3,56,000 rupees. With this, fifth problem from admission of a partner topic is completed. Hope this video is helpful to you. Thank you.